Greetings everyone, I'm Iris, and I would like to welcome you back on Ronsko Weekly, where we provide you the latest updates on Chinese steel prices and market trends every week. If you are new to our channel, please click on the subscribe and like buttons here to stay up to date. This week, the prices of steel in China continue to rise due to a variety of positive news. One factor was an unexpected move by the People's Bank of China on June 13th, where they reduced the 7-day repo rate by 10 basis points to 1.9%. This is the first time the rate has been cut since August 2022, indicating that the central bank is taking a more active role in supporting economic recovery. Additionally, the recently released U.S. inflation data also showed a suppressing trend, with the CPI for May increasing by only 4%. Which is lower than what the market expected. This marks the slowed growth rate in 11 months. As a result of these developments, there has been widespread speculation that the Fed may decide to pause its rate hike. In line with these expectations, that Fed announced on Wednesday that it would keep interest rate unchanged, which significantly increased market confidence. This led to a strong recovery in both the futures and spot prices of Chinese steel. Moving on, we will now examine the supply and demand factors. According to MySteel, steel production in China increased by 22,000 tons this week, while the apparent demand decreased by more than 200,000 tons. However, overall inventory decreased by almost 400,000 tons. Despite the fact that the market is still rapidly destocking and the pressure on steel inventory is relatively low, there is still the potential for a decrease in the long term. Recently released data indicated that China's PPI fell further in May, and social financing and new bank loans were significantly below expectations. Moreover, investment in property development and construction has continued to decrease significantly from January to May, suggesting that the market demand is still shrinking. As a result, low demand will likely remain the main factor constraining the recovery of steel prices. Moving forward to the next week, we expect Chinese steel prices to continue their upward trend. While China may introduce more policies to support economic recovery, additionally, the dollar may weaken due to the rate hikes in other major central banks, such as the European Central Bank, the Bank of England, and the Reserve Banks of Australia and New Zealand. Therefore, it is possible that the steel market will remain optimistic in the short term due to the impact of positive developments. Do you anticipate further growth in Chinese steel prices? As always, we will continue to monitor the market and provide you with the latest news and analysis. If you find this video informative, please subscribe to our channel and give us a thumbs up. See you next week. Bye bye.